Okay, so let's have a look at part D for Harrington 2022 production budget question. So it says prepare a production trading account. You're required to calculate the unit cost of budget closing stock for both products. So the budget trading account is basically your sales less the cost of sales, which is opening plus purchases take away closing stock. But before we do that, we need to calculate the unit cost of the budget closing stock for both products. So unit cost is going to be the same layout that we did for part C, which is your direct materials, direct labor, variable overheads and fixed overheads. And we're going to get a total for gold and a total for Portland. That's going to be the total that's going to help you calculate the closing stock to prepare the trading account. So if we look at material A for golden, so we need 6 kgs for material A. The price of that is going to be €5.50. So in here, golden material A, 6 multiplied by €5.50. For material B, for golden is going to be 9, and material B is value that costs us €7, so 9 by 7 gives us 63. For Portland, material A, 8 kg by €5.50. And for B then, for Portland, it's going to be 12 kg, multiply that by 7. So the cost of labour then is next. So we know it takes 6 hours for golden, 9 hours for Portland, and the skilled labour is 18 hours for each one. So it's going to be 6 multiplied by 18. And then for Portland, it's going to be 9 multiplied by 18. So 9 hours for Portland, 6 hours for golden to produce 1 unit, and the skilled labour is €18 per hour. Next one is your variable. It's the same again. We need 6 hours for golden, and it's going to be €12 per hour for variable. And for Portland, it's going to be 9. And it's going to multiply by 12 as well. So golden is going to be 6 multiplied by 12. And for Portland, it's going to be 9 multiplied up by 12. Okay, so to calculate the fixed overhead then per unit, it's going to be a little bit different because in the question it tells us what the fixed costs are. So our fixed costs are 579,550. Now to find the fixed cost per unit, you're going to take your fixed cost and you're going to divide that by the total hours that's needed to produce these products. So our hours needed for golden is 6 and for Portland is 9. But remember, we're producing from part A, we're producing 15,110 units of golden and 8,325 units for Portland. So to produce these products, we need to multiply golden 15,110 by 6 and Portland 8,325 by 9. And we're going to add those two figures together. That's going to give us our total hours. And then we're going to divide that into our fixed cost. So basically, to find out what our, sorry, now I just need to find some figures here. So your fixed costs, so the formula to find out the variable overheads per unit is your fixed overheads divided by your total hours. Our fixed overheads are 579,550. That's taken from here. So our total hours are our total hours for Portland plus our total hours for golden. So for Portland, we've got 15,110 units to make. It's going to take us 6 hours to make 1 unit. So to make these 15,110 is going to take us 90,660 hours to make golden. For Portland then, it's 8,325, multiply that by 9. Remember, the 8,325 is taken from part A. So that's going to give us 74,925 hours to make Portland. So when we add those two together, the total hours that we need is going to be 1,655,085. So we're going to divide that into our fixed cost, and that's going to give us our fixed cost per unit of €3.50. So for every unit we sell, it's going to be €3.50 per unit. It's going to be our fixed cost. So if we go back to our table that we are making here, so to produce golden is going to take 6 hours. Our fixed cost is €3.50 that we just calculated. And the same then for Portland. It's going to be 9 multiplied up by €3.50. I'm going to add each of these up, and that's going to tell us what is the cost of producing 1 unit. Okay, so 297 for golden and 429.50 for Portland. Now the next thing to do now is we can now fill in our sales. So we know that we're producing $15,025 units. So 15,200. Multiply that by how much we're going to sell it for golden, so 360 plus 8,400 multiply that by 410. So our sales are going to be 8,916,000. From that then we're going to have our opening stock. So the opening stock is going to be 900 units. Multiply that by 210, because that's how much the value of them are for each one. Plus 750, multiply that by 290. So 406,500 is going to be the cost of our opening stock. So the cost of manufacturing is taken from part B. Is that already calculated? So we're going to take it for the two of them. The cost of manufacture taken from part C. So we have part C. With this figure here, we're going to add the two of them together. And then we need to take away the closing stock figure. Now remember, the closing stock units are going to be taken from part A. So you go to part A, we'll see you got your closing stock of 810 and 675. So 810 multiply that by the 297 that we have above, plus the 675. Multiply that by 429.50. I'm going to take them away from each other, just like you would in your question ones. And then that's going to give you a gross profit then when we take that away from your sales. The gross profit then of €984,822.50. So the first part of part D is to calculate what it is per unit. So for material A, we took the 6 hours, multiplied that by 550, and then for golden then we took 9 hours multiplied by 7. For material B, we did the same then as well. So sorry, it was the 8 kg multiplied by the 7 for Portland. So 9 kg multiplied by 550, 12 kg multiplied by 7 for material B. Cost of labour then, so how many hours? It was 6 hours multiplied by 18, 9 hours multiplied by 18, and then for variable overhead then, we selected down here, which was 12 by 6 and 9 for golden and Portland. Your fixed overheads then, so you need to take the fixed cost per unit divided by your total hours, so that was the number of units we're going to produce from part A, multiplied by 6 and multiplied by 9, and then we divide that into your total fixed costs. And then your sales then, so we took the information from the start, 360 and 410. For Portland, we multiply that by the units that we calculated in part A. And then your opening stock then, taken from the question, so 900 units multiplied by 210, and 750 multiplied by 219. The cost of manufacturing was taken from part C, and then your closing stock then took the figures that we calculated in part A for closing stock 810 and 675, and we multiply them by the cost per unit for each of the products for golden and for Portland. So now with these videos, pause them as you go along, see if you can answer them, and then use them as a checking for yourself to see if you're correct. That's part D for Harrington production.